Today we're going to look at the current real estate market statistics for Hesperia in Victorville, California. We're also going to look at what's changing and where things are headed. The key data points we're going to be looking at today are going to be the interest rate, inflation, how long it takes to sell a house, the number of homes for sale, the absorption rate, and of course house prices. Are they going up or are they going down? My name's Dave Rupp, also known as Dr. Hot Rod the Realtor. I'm a real estate agent in Southern California for Exp Realty. All my contact information is in the description below. If you have any questions, feel free to reach out to me. To start off with, if you're not familiar with some of the data point terms and how those data points affect analyzing the real estate market, then check out the video in the pinned comments below. It's titled Don't Get Burned in Real Estate, all about real estate market statistics. Okay, the first thing we're going to talk about is interest rates. And when we speak of interest rates, we're speaking about 30-year fixed rate home purchase rates. So in the first week of August, what we've seen is interest rates hovering around 7.10%. They just bounce back and forth. They're 7.03 one day, 7.05 another day, 7.20, but give or take, they just keep bouncing back around the 7.10%. Okay, so that's historically not a bad rate. If you look historically, I remember when interest rates were up like 18.5. When I was young, if you got 8.5%, you were getting a good rate. But for the last 20 years, interest rates haven't really historically been much more than about 7.5. So when we're hitting the 7.10, most people think, that's a high rate. Even though historically 7% wasn't a bad rate, it's been 20 years of pretty good interest rates, and 7.5 is probably about the highest we've seen in 20 years. So we're all used to the 7.5 or less, and more recently even like 2.75, 3%, something like that. So now we don't feel too warm and fuzzy about 7%. So these days when we see interest rates around 7.1, that starts slowing market activity down. It actually started slowing down even when it hit 5.5. So right now the interest rate is giving us a weaker buyer demand than we would expect normally. So remember, on a $400,000 purchase, if your interest rate goes up 1%, that's going to raise your house payment about $240 a month. That in itself right now is giving us a weaker buyer demand. Next up, inflation. So how inflation affects the housing market is the higher the inflation, then the Fed tries to counteract that, raising interest rates, and then buyer demand goes down because interest rates are higher, payments are higher, you get less bang for the buck. Okay, so right now, the last 12 consecutive months, we've had a decrease in inflation. While it's not where the Fed wants it to be yet, they're still thinking about potentially raising the interest rates maybe another once or twice this year before the year's over. So assuming inflation continues to decrease, the Fed may still raise the interest rate once or twice, but if it continues to decrease, the Fed will turn around and start lowering interest rates to balance the economy so it doesn't crash into some hardcore recession. Once that happens, we'll see buyer demand pick up, but for now, buyer demand's still a bit on the weak side. Next up is the number of homes for sale, also known as inventory or active listings. Currently in Hesperia, we have 185 active listings. To put that in context, the lowest number of active listings in Hesperia in the last 5 years has been 132 active listings. And the highest number of active listings in the last 5 years has been 1,730. So you can see we're close to record lows in the last 5 years. And for Victorville, we currently have 185 active listings, which is the record low for Victorville in the last 5 years. And the record high for Victorville, 2,760 active listings. Okay, so we have either record low or near record low inventory for Victorville for the last 5 years. So how does low inventory affect the real estate market, you might ask? Okay, I'm going to explain. The lower the inventory, the less homes you have to shop as a buyer, which makes it more of a seller's market, which at some point when the inventory gets on the low side, then sellers have the advantage, which at any point when you have more buyers than you do sellers, then the buyers are going to have to compete with each other to be able to purchase a home. So that's going to drive prices up and it's going to make it a seller's market. Now this last week in the entire high desert communities, that includes Wrightwood, Apple Valley, Adelanto, Victorville, Hesperia, all of them. When you look at the whole area as a picture, we had a huge jump in inventory. But at the same time, we also had a very short days on market, which we'll get into next. But inventory is still tight and it still is a seller's market. Okay, the next data point is how long it takes to sell your house, also known as days on market. The days on market for Hesperia was 41. Days on market for Victorville in the last month was 35. Both of these numbers are still relatively low numbers, telling us that it's still a seller's market. The highest numbers we've seen in the last 5 years is about 65 days on market, and the lowest is around 15 days on market. We're about in the middle of that right now, but we're still in good solid seller market territory. So if we see this number decrease, that means that it's getting more and more of a tight market, a seller's market. It's bad for buyers, good for sellers. House prices go up, buyers end up having to compete, multiple offer situations happen, buyers have to change their offers, remove contingencies, make higher down payments, quit financing FHA, VA. Typically sellers don't like a VA or an FHA loan because they have additional inspections to get done. They start gravitating toward cash offers and really strong buyers. Also worth noting for the high desert area, just this last week, the days on market dropped to 22 days on average. Next up, absorption rate. This can be a bit confusing sometimes, so if you're not familiar with this, definitely watch the video in the pinned comments below. Absorption rate is expressed as a percentage, and it's a measurement of how much time it takes the inventory that we have to sell if no new inventory comes on the market. So right now for Victorville, we're in the 45% area, and Hesperia was at the 49% area for last month. Anything over 30% is a seller's market. So both of these numbers indicate solid seller's market. Okay, so where are we at on home prices? Are the values going up or are they going down? We hear a lot on the news about prices plummeting and losing your equity. Well, the reality of it is for Victorville over the last 12 months, the prices have actually increased by just under 1%. Which is really quite amazing. I mean, 1% sounds pretty weak. It's actually 0.9%. That sounds pretty weak as far as a gain. But if you think about it, what's that comparing to? It's comparing year over year. So we're comparing this year's gain with the prior 12 months, which was like the hottest market in history of real estate. So to gain 0.9% over the hottest gain in history is actually pretty dang good. Hesperia was down 0.7%. Which again, down 0.7, that's not terrible coming off of, you're comparing it to the hottest real estate market probably in 50 years. Okay, so in case you're wondering where I'm getting all these numbers from, all my statistics come from the California Regional Multiple Listing Service. The Multiple Listing Service has the most accurate and complete data of any source you can find it at. It records all the sales and all the pendings and all the activity around every listed property. If you're skeptical about this information, feel free to reach out to me. All my contact information is in the description below. I'll send you a copy of it. Also worth noting, right now the median house price in the high desert is only $9,000 short, for the record highest it's ever been. That's it. So much for a housing market crash. Okay, so since December, Victorville house prices have been nudging up progressively. Since February, Hesperia house prices have been generally nudging up progressively. So where are we headed in the market for the high desert? I would personally look for the interest rates by next year to start dropping down a little bit. People have been sitting here waiting and waiting and waiting. Once they start seeing some movement, I think, my personal opinion, that people are going to start moving, the inventory is going to get even smaller, and we're going to have a seller's market again. Okay, so what does all this data tell us as far as where the market's headed? I kept telling you that the market's clearly a seller's market from all the data points. So going forward, where are we going to be in another year or so? Most of the data points seem to be indicating that low inventory is here to stay. Most of the data points seem to be indicating prices are going to continue to rise. Most of the data points seem to be indicating interest rates will go down because inflation is continuing to go down. Clearly, none of us has a crystal ball. I don't want to make it seem like I'm trying to tell you exactly what's going to happen in the future because I don't know. But what I do know is what the data is telling us. Prices are nudging up, inventory is staying relatively low, inflation is progressively going down, which interest rates should follow that. So, given all those data points, the data is telling us that we're going to go back into a seller's market unless something different happens that we don't foresee right now, like maybe war breaking out and changing things in the economy or something unforeseen. So for now, the data points are all indicating that if you want to buy a house, this is a good time to buy while there's still a reasonable amount of inventory and not that much buyer competition. If you wait, there's a high likelihood that the competition will be much tougher for buyers and the prices will be higher. And we don't have a guarantee that the interest rate's going to go down much anyway. So if you're thinking about making a move in the next couple of years, reach out to me. Let's crunch some numbers. Let's look at what's going on at the current time, and we'll see what's good for you. Does it make sense to sell? Does it make sense to buy? Maybe it doesn't. Let's take a look.